Well, the chairman of the Federal Reserve says, quote, the time has come to soon begin reducing interest rates. The Fed's benchmark interest rate remains at a 23-year high.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
In response to Powell's comments, stocks immediately climbed higher with the expectation of rate cuts. Powell did not indicate when the rate cuts would begin or how large they would be. For analysis, we turn now to Patrick Horan, Economics Research Fellow with the Mercatus Center at George Mason University. Patrick, good to be with you again. First, your reaction to the news of the potential rate cut.
Thanks for having me on, Tracy. Well, I think most people were expecting interest rate cuts were going to be coming at some point soon. And the expectation was already there's going to be one cut in September at the Federal Reserve's upcoming meeting, that the FOMC meeting. That's the decision-making body of the Fed for monetary policy. So you can think of an interest rate cut as adding liquidity or adding money into the economy. So inflation has been cooling a lot. It's still a little bit above the Federal Reserve's 2% target. But the thinking is, well, inflation will keep trending down to 2%. Unemployment has ticked up a little bit. Job growth has slowed a bit. So the thinking now is, okay, now it's time to do at least one interest rate cut, likely more, depending on what data looks like over the next few months.
Yeah, Patrick, how much of a help will this actually be for the economy, though?
Again, it's hard to tell. I mean, you could think like, oh, it's just one 25 basis point decrease. That might not matter too much. I mean, on the margin, maybe that does matter for someone who's making a decision to buy a car or buy a home. Maybe it's not too many people. But as you mentioned as you were explaining this issue, stocks went up a lot. So you can also think people might be thinking, oh, stocks have gone up. I have more wealth. Maybe I can spend some more. So it could help achieve the Fed's goal of a soft landing. That is, inflation keeps falling, unemployment, and without unemployment ticking up some more. So it's hard to tell right now. We're really just going to see how events play out over the next few months.
Yeah, quickly, Fed Chair Jerome Powell says inflation largely is under control. What do you think about that? Do you agree?
I think that's generally right. We've had a few, so the beginning of the year, January and February, we had some disappointing reports with inflation coming in a bit higher than expected. But more recently, the month-to-month inflation numbers have been looking pretty good about what forecasters expected, or maybe a little bit better in a few cases. I think it's reasonable to do at least one cut. And there's also reason to think that monetary policy works with a bit of a lag. So even if it's not quite at 2, there's a good argument it'll keep trending downward. At the same time, though, I don't think the Fed should get complacent and think that it's a slam dunk. There have been a lot of times in the past few years where the Fed has forecasted where it thinks inflation will go, where interest rates will go, and it was very off. So I wouldn't want to. I don't think the Fed should promise too much. And I think the trajectory we're on right now is pretty reasonable.
Patrick, thank you so much. Great to get your insights.
Thanks for having me.